about instruments that are traded in the market, and I think it was that's a video up there. You go and watch it again, you'll understand what these instruments mean. Now, if let's say you see Euro USD is rising, and we said when the market is rising, it's more logical to buy the market. You join the buy. It means the buys that are going on, so you just join the market. So in such a case, you go to the platform which we are going to see in our next lesson. This one is class episode 8. In our class episode 9 is where you're going to see how you're going to be executing these orders, because we're going to be looking at the trading platform. Okay, please don't miss that video, and to ensure you don't miss it, please subscribe with the bottom, at the bottom right corner you'll see the subscribe button. It's a red button. Please just click on it and subscribe and share with friends so that you don't miss this learning opportunity here, because this thing is getting sweeter and sweeter as we go closer to the end of the lessons. So make sure you don't get lost along the way. Now, in such a case, you're going to place a market order if you decide that Euro USD is running very fast and you don't want it to leave you. You don't want the trade to leave you. You want to catch that trade. So you place a market order, meaning you do an instant buy. Why? Because this case we said Euro USD was going up, so we do an instant buy. We just press the button. So like this is the situation that will be happening. Market will go up, then it will go down, then it will go up, then it will go down, then you see it starting to go up again. You come here and place what? An instant buy. And since you are right in your analysis, which we're going to look at later in another video, we'll shoot another video about that. Then the market, we said in one of our previous videos that when you buy, you expect the market to also keep rising, so that you make positive pips. Now when you make positive pips, it means you're in profit. And when you're in profit, you multiply that with your lot size. You know the 8 principles we went through in our last video. If you didn't watch it, the video is up here. Please just watch it. So you multiply the pips times the lot size, and you get your profit. Okay, that is what a market order is. Instant. Saa hiyo hiyo unafinya tu buy ama sell. You don't wait. Yeah, I use it a lot myself. So that is a market order. Let's look at the other type of orders. So here we are looking at what? We're looking at a buy stop. Looking at a buy stop. And what is a buy stop? It is a buy stop. We're looking at a buy stop. What is a buy stop? Yeah, so just like a market order, a buy stop is another type of an order, but it's also on the buy side. So when we say it's a buy side order, we are assuming that a currency like GBP, we not use Euro USD so much. So a GBP USD as a currency that you want to trade, assuming again GBP USD is going up like this, coming down, going up like this, coming down, and you don't have to worry about this chart. We're going to be looking at proper price, how price is represented in the trading platform. Next time in our next video, you're going to be seeing how price moves like this, and you'll understand why I'm doing these things. So for now, just know price is going up, so I'm making a wave that is going upwards, just to get you to understand that price is in a buy direction. So assuming GBP USD, you have noticed that it is in a buy direction like that, up, down, then it comes down. Now this is how you implement a buy stop, and this is what a buy stop is by example. is what I'm showing you. It's easier for you to understand by example than me trying to define a lot of jargons about it. So price went up here and then it came back, took a rest or a breather. It went up again, then it took a rest or a breather. Now this is how you implement a buy stop. Remember last time we were here, we were anticipating that the buy will continue, so we would enter a market order right away here at this level. But now we are a bit fearful, you know, we don't want to enter a market order because we could enter this market order buy and instead it drops down, isn't it? Right away. Yeah. So instead you say, I'm going to place my buy somewhere up here, even though price has not reached here, price is still there, down there. But now because you have placed the buy ahead on top to a future price, you're anticipating price will reach here in the future, this becomes a buy stop. Because in the trading platform we have definitions, options. You can select whether it's a buy stop or a sell stop. So when market is going up and you expect it will keep going up, then like this, then you will place a buy stop here, up there, because you expect market will come, and it will come, if it passes there it will trigger your order. Your buy stop will be converted to a market order and price will continue going through it, and you'll be on profit all the way here. And that's what a buy stop is, guys. Very simple. And again, once again, as we go to the trading platform, this will become easier. During the trading platform video, in the next video, I'm going to cover these order types again there, and it will be easier for you to comprehend. So that is buy stop. And again, just like the buy market buy here, as price keeps going up because you have anticipated it will go up, you'll make some positive pips and some dollars here, and you convert it together with the lot size. That is a buy stop. And we're going to do a sell stop. Remember, the market order was for buy or for sell. It covers both. Yeah, market order is for both buy and sell. So we've already covered market order irrespective of the direction. So what now we are covering here is called a sell stop. Now a sell stop concept is the same as a buy stop. Remember we said when market is going downwards, we short. Another word for short is sell. So in such a case, if the wave for GBP USD is going downwards like this, GBP USD is in a sell direction like this, you'll also anticipate that by the time price reaches somewhere here in a future price, you want to sell. Now the only way to sell is to place an order called a sell stop, so that when it comes here and touches your order, it triggers your order and converts it to a sell, a market sell order, and crosses through it, pierces through it, and keeps going downwards. And remember, we said in a short or a sell market, if you sell and price keeps going down, then you gain positive pips. Remember that, please. We had said that. If you don't remember that, please check one of our videos. Please check one of our videos where we're talking about how the market works. Remember the logic for buy and sell. Remember that video? The video is up there, please. Let's go and watch it again. Good. Now, once we do that, now the next type of order, guys, is called limit order. Yeah, limit order now. Limit order is the other type of order in the market, and again we'll also cover it in the actual trading platform in the next video. In real time, you see, I'll show you how the price prints and where the order, you place the order. So now in limit order, these are called limit orders. Okay, so we have a sell limit and we have a buy limit. As we said, it's you to decide when to use this type of orders. When you get the logic, your mind will start playing. Your mind will start playing a certain game on you and tell you why this order is better than the other one for yourself. Because remember, in our last video, we said traders are of different types. They think differently. You know, in trading, the same way you dissect problems in life is the same way you be dissecting problems in this business. And that's why there are people who do differently than others, and all that there is. So sell limit. Now we said a buy stop order is what? Is a future order. You don't know the price will reach there. So to anticipate that price will reach there, you just place your order somewhere in a future price, and when price comes triggering it turns into a market order. Now likewise for sell limit, this one now is a previous price, not a future price. So I'm going to draw the price wave again. For selling, we know price is selling downwards like this. Then you anticipate that price will continue going downward, but first it has to come back up a little. Now it is this anticipation of a backward move before continuation in selling that will get you to place a sell limit. So you place a sell limit here. Sell limit. Now this sell limit will be telling the market when price comes back here at this price, because there will be a price tag here. Sell the market for me at that price, and you sell a certain number of lot sizes. Remember we talked about lot sizes. Lot size is what you define how much you want to sell. You tell the broker in your order how much you want to sell. So it's not just about sell limit. You have to define the sell volume. Okay, good. Now if that is clear, then when price comes there, it triggers the sell limit. The sell limit becomes a sell market order, and price continues downwards. And if it continues downward, then you're in positive pips. Remember guys, we said in our intro, pips are the game of this business. That's just what you should look for. Pips. Don't think about the money, think about the pips. You read the pips most of the time. Don't look at your balance when you're trading. Pips is what matters. So that is sell limit. You anticipated price will go back a little before it continues selling. Buy limit is the same thing. You see prices going up and down, up and down. Then in your thinking, you decide if this price comes back downwards, what happens? It becomes cheaper. You'll place a buy there. Now this will be a buy limit. That's the difference. So price will come back there, trigger this buy limit, pass a little maybe, and starts continuing back upwards. And this would give you positive pips. And because of positive pips, you will be in profit. Positive pips. You'll be in profits. Pure profits. Okay, guys? So that's it for those type of orders. Now, we have another type of order here. That's very key. We have another type of order that's very key, and we cannot skip these ones. So there are two orders I want to show you guys. Now, assuming you're buying, price is going up and down, up, then you decide to place either a market buy here, thinking the market will continue going up, or you decide to place a buy limit here, expecting the market to drip down and come and trigger you into a market order and start going up. Now, there's an order called a protection order. Protection or security or insurance, insurance. Just like you get normal insurance in life, even when you're trading, you need to insure yourself. And when you're insuring yourself is because, remember, there's a lesson where I mentioned when you're trading, you're not trading all the amount. So this is how you control it, because I remember I mentioned it, but this is how you control it, by having a protection or insurance behind every trade that you take. So like if you put a buy here, then you should put a protection somewhere behind it. It's you to calculate how much protection. Okay? It's you to calculate how much protection you're going to put. And during the market analysis, we are going to be seeing these kind of things. How to do that. Okay. So this protection here is called a stop loss. And it's very important. It's called a stop loss. What happens is that if you buy and you are wrong, price will come and trigger your stop loss and get you out of the market. So it cuts your risk very early. If you don't use it, then price will keep going and just eating your actual capital. So this limits that. Another thing, apart from protection and insurance, you have to have something called a target. Target order. Okay, this is also called take profit. Now, take profit, short for TP. Stop loss, the short is SL. You'll come across these things a lot. So when you take a buy here, you must define somewhere in future where you want to exit the market. And you exit the market with another type of order called take profit order, which is here, TP. So you define it and you place it in your trade platform. So that when price reaches there, it just changes to a market order and closes your trade, irrespective whether you're present in the computer or not. And as soon as it does that, the broker immediately credits your account. If you lost the trade, debits the account. Okay, guys. So basically, these are the types of orders, and they are very important. And as you can see, you are going to make use of them. You are going to be using them. You can decide now which type of order you want, how you want to go into the market. It's like swimming pool. Some people dive with the head inside. Some people dive with the hands first. Some people dive with the stomach, with the tummy. Yeah. So it's you guys to decide. You heard me talk about copy trading also here. Copy trading is very, very interesting kind of approach, business approach as a trader. You could decide to go the copy trading where, guys, you're just copying somebody else's trade automatically, and you make chums, you make money, you make profit. There is nobody stops that. There is nothing illegal about it. It's very legal. It's not like exams in schools where you cannot copy. This is where copy works for you. Just like any other thing out there. When you copy a good skill, it benefits you. You copy a good businessman or business lady, it benefits you. Guys, we've come to the end of the lesson, and it was pretty simple lesson with key concepts. As usual, the concepts were very clear, and the concepts were very simple. I hope people got it. And guys, if you feel you had any questions, you didn't understand anything, feel free to go and put this down in our comments. Comment down the video. Please share, like, and subscribe to the videos, because you'll encourage us to keep producing even better videos than this. And as we say, we're not just going to be producing class episodes, because you know you're going to graduate yourself into beyond the classes, and you become a trader, and now you'll be seeking for better knowledge, better ways of trading. So we will also be making videos on strategies, on different approaches to the markets. We shall be sharing different ideas, hints. We shall be having Q&A, like where the questions you pose in the comments, we're going to be making a video on Q&A and answering one of those questions with examples so that you can become a better trader every day. So guys, thank you, and have a nice time, and I wish you a successful trading journey as you proceed.